Greetings, this is Dr. Jeffrey Scott from lovely southern Florida, the best time of year to be down here, with my nightly update with Market MRI Pro for Wednesday, April 23rd, 2025. I titled today, Markets Rally into Expected Resistance. We've been talking about areas of resistance. We got through the 17-day. But we failed that trend line, which is not a surprise. The question is, do we pause to refresh and then break on through to the other side? Or is that it? I'm going to go with the former, but we will see. Again, my name is Jeffrey Scott. My email addresses are either hgsidoc@gmail.com and marketmripro@gmail.com. It was fun to see the 20-year emblem pop up on YouTube as they hit their 20th anniversary. I started doing these videos not long after they started based upon the 20-year time. Last couple of years I've gone to every week doing them on the weekend on YouTube, and now I'm doing them more frequently because I like recording what I do because I can go back and see how I did. Plus, I like to share my thoughts with my friends rather than just giving them stock picks, which is to me the wrong way to do things, but rather show them how I find things and talk about how I might trade them. So this is for educational purposes only. Anything I might recommend should be taken in the spirit of education and definitely not considered investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky. You should always consult with your financial advisor before making trades. And I have tools for multiple platforms, but am an independent trader. All right. So I showed you one of these yesterday, and this is from my buddy Sagar Nandi, SuperiorProfit.co. It's his market breadth tool. It's available, well, the good version is only available on Metastock. There's a version on TradeStation, but I don't find it nearly as powerful. It's just because some of the things that he's able to do in Metastock with this tool called Fire. But what you could see here is, big day. We're not going to talk much about that. I want to just we'll talk about it later. See these green dots again? This was the second heavy accumulation day in a row. And you can go back a long time. Oops, didn't want to show you that yet. You can go back a long time. I was trying to scroll back, but this is a picture, not the program. It's hard to find periods of time where we had two such powerfully strong days in a row. Now, actually, I have a feeling that it didn't even give me today's trading bar here yet. I've had that problem because there's been a change in feeds. But what I really wanted to show you is, because this was yesterday's with the Eureka, is two very forceful, powerful up days. Orange County meeting, I know I've been talking a lot about it because I've got some really strong people now committed to come to the meeting to speak, either live or zooming in. I want to have a good show. And if it was a good value 2 weeks ago, it's a better value now. June 6th to 8th, Residence Inn and Suites in Tustin, Orange County, California. When the room fills, I will open up an internet option. I will not offer internet if we don't fill the room. If fee is $300 through the end of April. We make that as a special for prior attendees, but we decided to open it up to everybody because I started saying it was a $300 meeting when I started talking about it. For more information, reach out to Greg Mills at gam72054@aol.com. If this is like typical years, we'll have a slow fill, and then the last 2 weeks it'll be a sprint, and we will end up opening up the internet. Don't know for sure if that'll happen. Even if you can't be there live, it's worthwhile signing up because you will get a recording that we provide and a bunch of other goodies to those that both live in the room and those that can't be there with us live. So please think about it, 300 to the end of the month. So let me tell you who's coming. John Person. John Person also lives here in South Florida. We've become very good friends over the years. This guy has owned a futures exchange. He's been trading. I think first he was it the is it the stochastics? The guy from the stochastics. I think he met on the train in Chicago on his way into going to school in Loyola. The story goes something like that. And he quit school and he went to become a trader and has traded everything you can think of. He manages a fund now, his own fund, so big dollars invested. Super, super person, smart guy. He's authored a number of books. He's got free indicators in Thinkorswim. And if that's not enough, um, he's just a great guy too. So I think you'll really enjoy him. I paid to see him live multiple times. A new announcement. Dan Fitzpatrick, stockmarketmentor.com. I think I got the website correct. So Dan is he's he's a trader and a trading educator. He uses a very barren chart, price volume, moving averages. Sometimes you'll see a MACD. Um, he's a he thinks like I do when he looks at stocks and markets. Now I don't know if I should say he thinks like I do. Maybe I should say I think like he does. I subscribed to him for so long. When I look at what I pay on a monthly basis, it's about a third of what they charge now. He's not a doctor like me, but he's a lawyer. And if I remember the story correctly, he quit his legal practice and went into trading full time. He's a great teacher, fantastic teacher. He doesn't usually do these events, but for maybe it's because I've been a long time subscriber, maybe because I hit him on a good day. He agreed today to speak at the program. He'll most likely be zooming in, but he's not far from where we're meeting. Chris White, most of you know him who've been to our meetings, the proprietor of edgerator.com. It's a great program. It allows me to automate some of the scans and do some great back testing. He always comes with something new. And then I've got a tentative from Matt Caruso. I've got a yes from his team, but until I hear it from him himself, I'm going to call it tentative. Let me tell you, with or without Matt, and I'm certainly hoping and expecting Matt, you'll add my rantings and ravings. I'm Dev Keshav, and maybe one other person. You're going to have one heck of an opportunity for great education, and it's about education, education, education at a low cost. So I hope you consider, and please sign up earlier than later, because then we'll open up the internet. And oh, by the way, internet folks are going to be paying. Internet only folks are going to be paying $400. So if you sign up now for 300 and you can't show up, you'll be the least expensive watching it on the internet. If you like these videos, you want to know more about what I do and what some of these other folks do, join my Google group. I call it Top Down Trader. I'm going to have to do some branding because I got Market MRI Pro and Top Down Trader out there, and I think at the end of the day, this is the brand I want. I think the Market MRI Pro is a tool. You just go to Google Groups, sign in, search for Top Down Trader, let me know how you want to be notified. And why would you do that? Well, I'm not going to solicit you. I'm certainly not going to charge you. I used to send out a video every night to friends and family, or at least some comments about the market. And then I started getting identified as spam to my own family members. So I decided no more use of personal email for sending out on a regular basis. I don't want to keep a mailing list. I don't do this for a profession. I do this because I like doing it. I have a company with 3,500 employees that keeps me busy during the day. But by joining the Google group, you'll just get notified when I have something to say, one of the other members has something to say, I post something, etc. And again, it's free and it's better than free. I'll give you some discounts on my tools if you buy them. Know your news and earnings. So I think we had a miss on PMI, but I don't think any of the data before Liberation Day matters because everybody's discounting everything going forward except for inflation because of tariffs. What do we got Thursday? Jobless claims, home sales, and Neil Kashkari speaking after market closes. And then we got consumer sentiment final for April on Friday. I think since it's final, it's probably not going to be market moving. Um, Earnings, big month of earnings. I don't think the Tuesday night earnings hurt the markets. Right now on Wednesday night, um, modest up, very percentage wise, very little, but the board, excuse me, is green. There were some big earnings tonight. Just to give you a flavor, I think it's Impinji PI is up, the big winner, 15.2%. CYH 14%, now 10.8. Texas Instruments 4.8. That were some of the big winners. Um, Robert Half, I guess it's Robert Half International, RHI down 15.3. Looks like Alaska Air's down 7.7%. IBM's down 6. Love is down 3.6. Southwest. So mixed earnings. Right now the market is pretty flat positive, better than flat negative, and a lot better than big negative down. Thursday's a big day. We've got some big earnings early. We've got American. I guess Southwest went early. Merck, Intel, Alphabet, T-Mobile. So still another bunch of big earnings. We still got 2 or 3 more busy weeks to go, by the way. I haven't seen Amazon, Meta, Netflix came out early and had great earnings. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. My guess is Amazon and Microsoft are next week. On to the charts. So if you haven't been here before, I have my own tool. It's called Market MRI Pro. And what I've done is I've developed a way to analyze markets. And I used a little bit of about 10 different programs, which I still have, and many of which I still use. And one of my users, Praveen, put together a single app that incorporated the things that I do over and over again. And most of it's not really proprietary. It just made it easy for me. So it's a real-time updating. I have it on my machines all day long. Let's start with the daily brief page. What this tells me is there's really 4 different quadrants. Quadrant 1, I've ranked by 1-day close. We can see the Q's led up 2.27, Spiders 1.5, Russell about 1.5, Diamonds up 1%. The volatility was down 3.61. This is something that made me unhappy because the markets were up a lot more and we closed near the bottom of the range, off the bottom but pretty darn close, and the volatility actually closed in the middle of the range. Below it, we have the S&P 500 sectors, and then just some themes that I like to track to see what the market's doing. If we look at performance, you could see of the 11 sectors, 9 were positive. Only things negative were staples and energy. What was strong? Well, if you're a risk-on sort of person, you would have loved today. Technology, discretionary communications, industrials, and financials were all over 1% positive. Looking at themes, 4% on uranium, semiconductors 3.65, global cloud 3.44, software 3.3, social media 3.3, software 3.17. Robots were up 3%, 2.9 Internet of Things. Gosh, this feels like a regular bull market rally day with technology leading. Boy, that would be awesome if that actually continues because they brought us down. But I still think we've got some work to do. And we'll talk about why, not just my thoughts, but what I'm seeing in the market. Here is a really cool tool. Sagar started doing this on the S&P 1500. And it's a great way of doing it because you think the 1500 has the 500 large cap, 400 mid caps, and 600 small caps. But I'm also curious about the NASDAQ and the NYSE. So we took all the stocks in these indexes, put them into sectors or industry groups. Our software provider does that. And we can ask real-time updating what percentage of the sectors were up. And you could see the majority of the sectors were up on each of these. Now, the gray bar is yesterday, so the NASDAQ and the NYSE were a little weaker than yesterday. Then we look at what percentage of industry groups were up, 78, 75, and 74. A little weaker than yesterday, but still very strong. How many stocks were up? 73%, 71, and 69. Weaker than yesterday, but still pretty strong. So it was a super strong day in the markets, even if we finished well off the highs. Up here on the right, we look at new high, new lows. The left is the NYSE, the NASDAQ on the right. And we can raise the flag of victory if you're bullish, maybe, half staff. Because for the first time in a long time, at 1, 3, 6, and 12 months, the new highs minus new lows are positive numbers on both. I like to say that bull markets are not made on new lows. The fact that we're starting to see new highs, 52-week highs, is a big deal. So I'm very encouraged by that. Another thing I like to look at the market is something that I learned from my mentor Ian Woodward, and it's called bucket analysis, where we ask the question within the S&P, within the Bollinger Bands, if you take and divide up to 10 deciles, the first decile on the bottom, the 10th at the top, and then you have one below, which we call 0, and one above, which is this one, which is 11. Where are the stocks falling in the indexes? In a bull market, the stocks will typically range between 6 and 10. In a bear market, between 5 and 1. In a very overbought market, you'll see the ones above getting to be 20 or 30%. That's a reversal signal. In an oversold market, you'll see the same on the below. What do we see here? We're starting to move towards the right, which means the markets are healing. We're starting to have very few stocks at the bottom of the Bollinger Bands. That is an improvement and a significant change. I have my own market breadth tool. Now, this one only updates at the end of the day, and I'll just show you on the left is the NYSE, on the right is the NASDAQ. We are going to bring this out in weekly, although I historically have never used it in weekly. This here is in the daily settings. You could see, sorry about that, let me bring this back to where I want it to be. You can see the NYSE, it's not a shooting star, but it has a really big topping wick. That's, to me, a sign perhaps of exhaustion. It means the market opened here, because it's an open candle, traded all the way up to here, and then came back and closed in the lower half. Bullish day, of course, it's up. That's not a bullish candle. On the NASDAQ, it gapped up to here and closed here. So even though there's still a big gap and a positive session, not the most bullish of closes. That goes back with what I showed you before. Here is regular volume, and we don't have today's volume in there yet. I guess that's what happens when I do this early before all the data is through the provider. Here you could see stocks above the 17 really racketing higher as the breadth is improving. The red is above the 200, the white's above the 50. Actually, it's not above 17, it's above the 20, I'm sorry. And you could see improvement on both sides. When we get to be really low is when we look for reversals, like we look for here. For the first time in a long time, whether I look at new high, new lows, advanced decliners, or up-down volume, you're seeing green coming in. Now, in a bear market, you'll just see reds with a rare green day. In a bull market, you're going to see greens with a rare red day. So that's actually an improvement. So, boy, maybe I should be very bullish and excited. Well, I am, but not really, and I'll show you why the not reallys. You could see we were, if I go back far enough, I could show you a major uptrend. And notice the new high, new lows were green the whole way, and you had some up and down days on the ADs and the volume, but you built it on new highs, not on new lows. If I go into my timing model, and I love the graphics here because you can go back and back test yourself. You don't even need to think about what goes into it. The model is this line under the charts. We went into a sell signal here, kept us out of most of the damage. We went into a sell signal here on the weekly chart, kept us out of most of the damage here and here. So the whole point of my model and my timing model is to get out early. Now, it was a very disappointing day for me today, not from my accounts, but this is the weekly model. This is slow. The daily model, which was also in a sell mode right now, actually flipped to a buy mode on 3 of the indices during the day. But you have to close above your WMA, and you could see the Spider, the Qs, and the Russells all traded above this yellow line and failed. The one in even the diamonds traded above the yellow line and failed. That's one of my concerns. I guess if I want to show you something good, the monthlies, and as I said yesterday, the monthly bar is not over until the end of the month. We were in a sell signal on the monthlies mid-month on both the spider and Qs, and they reverted um, back to a buy signal today. Now remember, the signal doesn't matter until the end of the month, so we have time for the others as well. I think the diamonds have a good chance if we rally into the end of the month. The Russell, not so much. If I look at the index charts, you'll see why my concern about rally into resistance. Here is a trend line. Now I can move this around. I'm not the world's expert on trend lines, but I want to take in this one and this one where we had the topping tail going into that trend line. So we made it above the 17-day simple, or for those that like EMAs, the 20-day EMA or 21-day EMA was tracking the same way. But this trend line was resistance here and here. We didn't get there here. I got to break above it before I believe the bull market is back. And my expectation is probably that the market's going to go and bounce around a little bit before it gets through. So I wouldn't be too disappointed if we trade sideways a couple of days. That would actually be healthy. If we break above it, that's great. Then I have to worry about this falling 50 and the 200. So we still got a lot of work to do for me to convince that this is over. Now you'll see the same exact picture here on the Qs, on the diamonds. If I highlight the last candle, you could see over in the upper left-hand corner up here what the move was, but we already talked about that from the other tool. In white is the move of the day. Up across the top, and we're talking about which way I would rather see close to close in the percent move. Praveen built it just to show the move during the day from open to close. So we're doing some work on that, so that'll be changed. And by the way, this is a staging version. We'll probably push out an update by the weekend. So VIX is coming down, but notice the VIX had a doji, an indecision bar above the 50, which could be support, and way above where it was living before. So the VIX is telling me something. It's telling me that maybe we're not totally out of danger yet. And look, we got into this mess because of Liberation Day tariffs and stupid battles between our country and China over ridiculous tariffs and embargoes. And the last 2 days, we've had the rhetoric switch to we're trying to make deals, we're making deals, we want to be friends. So this is all rhetoric and noise driving the markets. It's really disappointing, to be honest. If we look at the dollar has been in a free fall for quite some time. There might be some reasons why the dollar being weak is good. It helps us sell things overseas if there's not massive tariffs. I think the weak dollar here now is, tariffs should make the dollar go higher. I really wonder if the problem here is that the concern about the tariffs is beating up the dollar. And that would not be surprising because 2 days of less concern and the dollar was up. So I think we don't want the dollar to get much weaker. If we look at commodities, there's been a change here. And let's take a look at gold. This is the big change. Gold, which has been in this is not a sustainable, this is a climax run if I've ever seen one. And then you had yesterday, meaning Tuesday, a bearish engulfing pattern on gold and then a gap down. Gold to me looks like it's peaked for now. So I lightened up on some of my gold positions. Now, I'd love to see it come down to the 50 and bounce again. But I think tariffs on, gold goes higher. Tariffs off, gold comes down. So I expect gold perhaps to work up some of this extremely overboughtness. And by the way, it was really overbought yesterday on this candle here. The high jump on this candle here. It's not working the way I want it to work. Actually, I can probably see it here. No, we don't have it doing that. There's a way for me to show you on some charts what the high jump was on back, but we were extended up here. It's pretty obviously. Silver, which has lagged gold, actually wasn't as bad looking in the market. It was up 3.59%, while gold was down 1.42%. Silver has some more uses than gold in that it's not just a precious metal, it's got industrial uses. So actually a pretty powerful move. But look at what gold did here and where this came from. Um, on the energy front, oil was down another almost 2%, and natural gas failed to hold the 200, so it's dead to me again. And then, similar to my story on the dollar and tariffs, um, I don't think the bonds like tariffs either, or somebody was liquidating, whether it was the Chinese, and that was causing um, rates to rise. Um, Rates rose again today, but I don't think that's a sign of weakness. I think that might be a sign of strength because of the tariffs maybe easing. At least the rhetoric is easing. All right, so now I've established in my mind that um, I think the market is probably going to slow down its rally here. It can still go higher. News can happen. I might look for a couple backfilling days, even a little down day or two. And I think before I would personally, this is education, not investment advice, I got these on my charts for a reason, folks. And this is exactly what I thought would happen. That's why these were here. Um, I'd like to see us get above the trend lines before I put new cash to work. That could happen at the open on Thursday. So I'm open-minded. I think you got to keep an open mind where you go, but also recognize we failed, we failed, we failed. We'll see. We failed, we failed, we failed. We'll see. We failed, we failed, we failed, we failed. We'll see. Um, is this time different? It might be. But then, do I go all in? Do I spend all my hard-earned cash? Why would I do that? Right above it, I've got to worry about in less than, you know, 23, 4%, I'm going to run back into my next level. So I think you still got to be careful here. If this market breaks out above the 200s, and then I'm going to be talking all-time highs, excited, the world is great, love it, love it, love it, you'll have plenty of time to make money. I think it's still time for caution. Doesn't mean you shouldn't be buying stuff. On yesterday's video, I talked about how I bought PAGS, which did nothing today, um, Palantir, which had a great day, and the third thing I bought was, come back to me, what did I buy? Anybody watched my video yesterday will know what it was. Toast. Why? Because I think it's so cool when I go to a restaurant and they do my thing right in front of me. There's no more carbons, which dates me, but no one's going to get a chance to steal my numbers. I love it. All right, so let's look at the ratio charts, which these are all, this is Bitcoin on the left. The rest of these are all S&P sectors in a ratio chart with the spider. Gives you relative performance. And what is leading? Well, I can tell you that staples, utilities, real estate, and healthcare had been leading when the market was falling. They were not leaders in the market on Wednesday. As I look around, financials, which was strong a day ago, was still pretty strong. Utilities isn't doing bad, especially some of these electric generators like GE, Vernova had great days. Communications looks okay. I think financials, industrials had been leading. They weakened a bit. Let me find them here. But, it just, today we know it was up. Technology, you can see the white line, but it's been weak for a while. And discretionary has just been weak for a long time. Let's go into the JAS layout. So I spend most of my time figuring out the market, if you can't tell by now. And that, good or bad, that's what I do. I have developed a tool that allows me now in 10 minutes to figure out if I'm going to buy anything and what it might be, and then I'll call it a night. Again, this is for education. So I have my impulse here. I've got the JAS list. These are all the stocks in the NYSE plus NASDAQ plus Amex filtered for $1 and 100,000 shares. No, I don't trade stocks that cheap, but I want to look at them if they're moving. I have 3,500 stocks tonight in my universe. As the market does well, that will get bigger. I can rank them by percentage change. I can rank them by my impulse dots. My impulse dots are just simple things. I'm looking the CPR, which is a type of a crossover system, then big gaps up, big volume days, breakouts, momentums, and I'll commonly look at the stocks intraday that are having the biggest number of dots to see if there's anything actionable during the day. That one looks interesting. I don't like it being below the 200, but that Vertiv was probably the most interesting. Tempest was another one that I saw during the day that looks like it's starting to run. This guy is boring. No, not at all. And I actually know the CEO fairly well. It's not boring. It likes to do this big swings. Well, it's swinging back up here. What I really like to do is go into my top-down view where I can look at those 3,500 stocks now packed into the 11 sectors and about 140 industry groups. And FM2 is a 2-day momentum, and I'm going to use that to rank this evening. And what's up at the top are technology, consumer cyclical, and communications. So if I looked at those top three groups, I have 1,068 stocks to look at. I'm not looking at it, so don't worry. But what I might do is use the same ranker because now I've limited it to the industry groups in these sectors. Let's take the top 10. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Still have 526. Now let's put in a filter of $5 and 500,000 shares. And, let's make it tough. I want price above the 200-day moving average. Hit OK. I'm left with 84 stocks. So I could rank these by 2-day momentum and just go through the list and see if any of these are actionable. PEG, I'd make sure this isn't a buyout because it kind of looks like it, but if it's not, whoops. Oh, okay, never mind. PEG had a massive breakout. Look at the volume. I can look here and see, was it earnings? Earnings came out 422. Oh, that was last night. 218% move, $1.53 versus 48 cents. A massive surprise on earnings, a massive surprise on revenue. This is actually kind of interesting. Good earnings per share growth. I might look over here on the news and it'll tell me what's going on. And let's say I want to read what happened there. I can click on that. It'll bring me up the web page. That is a big consensus. So, I might read about it. So I don't like the pattern here, but I do love the volume. I love the fact that every one of my indicators here are on a buy. They're blue or green. This is relative strength versus the spider, and this is OBV. So what don't I like about this? Well, I don't like about the fact that it's, I'm chasing something that was up 28%, but it's still well off of its highs. It had a death cross, but I'm not sure how much that means on an individual stock. I might put that into a watch list. So if I right click and put in my longs, I might go back and look at it later when I finish with you. Duolingo, similar story. Must have had earnings. Let's open up the earnings box. Earnings were February 27th. And what's the news? Fresh buy rating, street high estimate target. Well, what is their target? Price target of 435. What's the stock trading at? 364. Well, that is another one that looks interesting. And so I'm just pulling the top stocks and the top industry groups. Netflix, we know about this one. Earnings blowout last week on Thursday. The only bad thing about them is timing sucks. Friday was a holiday. SAP. So all these had big gaps. Was this earnings as well? We're in earnings season, so it probably was earnings. And earnings came out with a surprise on both top on earnings and on the beat. I think having that access to the news and the links was genius of Praveen. So there's a lot of stocks here that look interesting. CrowdStrike just broke above the 50. APP, man, I love the stock on the way up. It's tough down here. It had a big move today. It had a 6% move, 14 points. I think this one may go higher, but it's got a lot of overhead supply. People saying, let me sell it. Talked about MicroStrategy since the weekend. It's breaking out here. Is it too late? It might be. I mean, you had the fresh breakout 2 days ago. We talked about it. But if you believe Bitcoin's going higher, it probably goes higher. This is a leveraged accumulator of Bitcoin. Spotify was one of my picks yesterday. Don't like how it finished. It finished up on the day, but it reversed intraday. So because it's a solid, which means it closed below the open. It's white. It means it was traded up on the session. So you have a lot of names here that have been interesting plays. Snow had the misfortune of coming out with an IPO price that was ridiculous, and it still has never gotten back to where it was. But Snow, let's go back to the daily. It's kind of down in the pattern. I don't like this one as much as the others. I mentioned I bought Palantir. I saw this little flag forming. I bought it yesterday in the market. I just picked 3 stocks that I liked and said, I'm buying something. It's a follow-through day. And Palantir had a big up day in the market as well. So that's one approach. That's a top-down approach. And I love it because I've made a decision on the market. I'm careful, but still leading to the long side, not all in. I pick the top sectors by momentum, and then I pull the stocks that were leading, and I look for specific patterns. Now, some of us, myself included, will not have the patience for that on every day, or they can't help themselves. They still want to find that Lone Ranger stock that's doing really well, even if its industry group doesn't make it into the top list. And to me, that's bottoms up. So the way I do bottoms up is let me take out, let's start over from scratch. There's my 3,509. I'm going to eliminate before we even go any further over 500. You got to be over $500,000 shares and over $5. That brings me down to 1,909. That's my universe. And you know what? If this was Friday night, I'd rank them by 2-day momentum, and I'd start at the top, and I'd look at every one of these stocks. Not going to do that tonight. Now, I could rank them by the number of dots, which I did in the very beginning when I started. I could rank them by short-term momentum and see what's leading. And again, it's going to be some of the same stocks. There's your Pegasystems, ServiceNow. Great day, great AI story, but still low in the list. Cantor Equity Partners, I don't know if something happened there. Could be just earnings. Yeah, I don't know what the story is there. Don't really care. There's Duolingo, which we already talked about, that I thought looked nice. Netflix, which is great. HubSpot. I'd rather wait till it's above the 200, especially with the candlestick that shows it closed way off the highs. SAP, this looks really interesting. It closed off the highs, but it's above the 50. So again, a lot of the same stocks come to the top. Or I can just look at a group. Let's just look at the, let's see if I have it still. I had a list of, these are some of the highly owned MAG type stock. They all got a problem. They're all in a massive downtrend. And how do you buy these stocks unless you're just hoping and believing that they're going to go back and retest old highs someday, which they probably are? Well, you could draw a trend line and say, I'm going to leave it here. When I break and close above that line, I might consider. Until then, I'm still in a downtrend. We rallied up here, but we rallied here and here and here and failed. Let's see if we can get above it. So Amazon, I wouldn't be chasing until I break out that trend line. Of course, I'm going to be late taking up. AP&P, great looking stock, especially on this run up. Not so good on the way down. Setting up, I would rather see the longer base. Google, I mean, these things were all up a lot, but just like Amazon, I don't even know if I want to look at this bar when I do this, but you're probably getting close to the point where they're going to break out above resistance. Meta, every one of these is beaten up. Microsoft, Netflix is the one superstar. And I mentioned on my weekend video, was it going to run into some double top areas in here? It's going to have to break out of this. This could be resistance. It had great earnings and all that, but in a market that isn't that convincing that we're going to keep going higher, it's a double top. We'll have to see what happens. Nvidia had a pretty good move, but you know, is this in an uptrend or is this in a downtrend? I think it's in a downtrend, and I think that you could easily say that what we saw in the market on whatever day today was, Wednesday, was and on Tuesday were ferocious but not uncommon dead cat bounces in a bear market or a bear market rally. You're still in downtrends on all of these. Yes, they're going to recover someday, and maybe that's today, but you'll have plenty of time to make money. At least Tesla's putting in a bit of a base. Um, Still got to get above the 50 and the 200. So I see a lot of resistance here. And then the last thing I like to do is I got my favorite scan, which is my the 2-day momentum up in a row. For whatever reason, it's uncanny that these are good stocks. Duolingo, we've looked at already a couple times. I think this is interesting here. Um, you're chasing it, but it's not extended. High jump's only at 50%. You had great volume. I like Duolingo here. Not recommending. I'm just saying what I like. Root, we talked about this last night. I did enter a small position today. It's an expensive stock, and it's starting to run. I like that. EPWK, I think I looked at it and sort of ignored it. Maybe I shouldn't have. Grail is a that's a lab play, and we saw what Tempest did. I think the whole industry group did okay. Um, Liberty Live, I think this is a lot of their sports and concerts, broke out above the 50. Amadeus, I think this was a takeout candidate, so I'm not going to say anything. RGNX, a lot of biotech have been beaten up. What we're looking for are these two dots here in a row. These are momentum dots. And typically, you don't often see two dots in a row, and when you do, you get a run. And here was a short run back here, but it wasn't a bad run from here up to here, and then you had a reversal sign. UTI, I make sure it's not a takeout. It's gone sideways for a while. Lightbridge, is it going to do another run up? RUM, Rumble, and Epsom salts. Don't know this one. I think the first two are the ones I like the best, Duolingo, and I still like Root. And now I'll take a diversion. I'll take a little victory lap, but I wanted to comment on it because I had a couple of people ask me about it. I had talked about Summit. This will probably be more than you need to know. I'm a cancer doctor, okay? I don't practice anymore. I'm in the healthcare technology business, but I'm still very close to cancer medicine. The most common class of drugs market today are called immuno-oncology. These drugs have really changed how we treat cancer patients. I think the market is projected in current dollars for immuno-oncology drugs in cancer in 2030-32 to be like $300 billion. The two biggest drugs are called Keytruda from Merck and Opdivo from BMS. They are the two of the largest selling drugs in the U.S. They are, several $100,000 per year per patient. And they have revolutionized how we treat so many cancers: lung, bladder, triple negative breast, kidney, and so on and so forth. Up until here, there was no clue that another drug would come into the market and be compared, or no evidence yet, to the Keytruda and Opdivo type drugs and beat them. Here was a very early study. I happened to catch the results and I said, I need to own that stock. I talked about it because several people bought it at $10. I took an option position. Here was a meeting, and this was a decent move up, and a meeting that I was at in Barcelona. And I remember sitting in the room when they presented their study, a randomized study, and they beat the current generation of immuno-oncology drug pretty hands down. Nobody believes it. I'm hard to believe it too. It's combining activity of the PD-1 drugs and what we call anti-angiogenesis drugs in the same molecule. And when you combine the two separate drugs, they don't work. So something about their drug, and I took off half mine on this run. I think you always got to take profits when you get this because it may be a long time before you get back there. It lingered here, and I left on half my position. It had a massive move today and going into today. We talked about it over the weekend. I didn't go into this detail. So I'll just tell you what I'm doing with my position. I think if this drug is real, this company will get bought by BMS or Merck, and it could be bought one of the largest biotech acquisitions of all time. I thought that their market cap here is in the 35, 40 million range. Let me look it up on a different device because it's not giving me any of the fundamentals. However, saying that, if the next study comes back negative, the stock could drop down to $5. I think you have to take profits. So I sold half on this run. I got to sell some more. The market cap here is 24.5 billion. All right. I think it could be bought for 4 times that. And maybe what we saw today is the beginning of the market getting to that expectation. It was the first head-to-head randomized study to ever beat in lung cancer the PD-1, the Opdivo or Keytruda plus chemotherapy, and this drug beat it. That is monumental in my business. That's why this happened today, a 20% move. I'm going to take some profits tomorrow, and I'm going to let at least half of what I have left ride. I'm going to pinch my nose, close my eyes, and know that even if you only have a few shares left, if this thing goes up 4 times, you'll be happy you kept some. But I've seen too many drugs go back down to zero because the drug doesn't work. And oh, by the way, the study that did this, and this is the big problem I see for the stock, it's a all China study. So they're doing a similar study internationally now. Our FDA will no longer approve a drug based upon a Chinese study. So if you've been around with me for the ride since $10, you're welcome. Remember, I'm not giving investment advice. Here I'm just speaking my mind of what I think I'm going to do with my remaining shares. It was a wonderful day for Summit Therapeutics. Sometimes you got to just take profits. And what happens if I sell a half? All right. Let's just imagine that I sold here off the top my first half. Okay. So I bought at 10 and sold at 26. And then I'm going to take another half and I'm going to sell it if it hits 35. I'm still left a quarter of my investment and I let it run. I covered my entire cost of the trade pretty much when I took the half off at a 2.5 times run. This is where the stock came from. So this is how I look at the market. This is how I look at things. Comments are certainly welcome. Again, you're on your own. I'm not telling you what to do. I'm going to show you the stocks that I'm looking at. No, I did not buy it at $10 actually. I bought options because I could buy a crap load of options. This thing was the premium was so cheap. And I sold a half a crap load of options up here. And then I took the winnings from that half a crap load of options and I just bought regular shares. And now I'm going to sell off some of my shares because what is, bulls, I don't want to be the slaughtered hog or slaughtered pig. On that note, happy Wednesday. It feels much better to have a market going up. But as I started with, and I'm going to finish, we ran into resistance. How much farther are we going to go without a little bit of pause to refresh? Thank you for following. Join my top-down trader group. And if you're even thinking about coming live, sign up for my meeting. It shows me that I'm creating value for you, but it means I'll be able to drive it to the internet and get more people to sign up. And even if you don't come, you'll get the summit recordings. Thanks, everybody.